Have you ever heard anyone say you need a good credit score, but they don't explain what a credit score is and what it means to have good credit? Today we're breaking down what a credit score is, how you can get one, what impacts your credit score, and we'll dive a little bit deeper into why your credit score matters. So what is a credit score? A credit score is a three-digit number ranging from 300 to 850 that helps people determine how responsible you are with borrowing money. Said differently, how good are you at paying people back and paying them back on time? You can think of your credit score as a grade for your financial responsibility. Now you might be asking, who determines my grade? The people that determine your grade are the credit bureaus like Experian, Equifax, and TransUnion, who collect information from your lenders about your payment history. Now you might be asking, well, what's a good grade? As you can see on the screen, a good grade would be an 850, or you'd be getting an A in theory because you are paying people back and you are paying them back on time. A bad grade, or an F, would be a 300, and that basically means you're failing at paying people back and paying them back on time. So how do you get a credit score if you don't have one yet? The truth is that you're going to need to start using credits. Now there's a number of ways that you can do this. For example, you could get a starter credit card. So you could go to your credit card company and try to get a low limit spend credit card, maybe $500 or $1,000 or something of the like. Another thing you could do is try to become an authorized user. So for example, you could go to a family member who has a credit card open and try to get it on their account so that they can help you build a credit score. Another thing you can do is get a small loan. For example, if you want to buy a car, maybe you could get a car loan, or another alternative would be to get a credit builder loan. Now, if you do any one of these things and you start making payments, after a couple months, you will have a credit score. So what makes your credit score go up or down? There's really 5 factors, and the first factor is your payment history. Meaning, do you pay your bills and do you pay them on time? If you do, your credit score will go up, and if you don't, your credit score will drop very quickly. The second factor is credit utilization, which basically means how much of your credit are you using. Let's say that you have a $1,000 credit card and you use 90% of it, so you always have a balance of $900. That means your credit utilization would be 90%, which is not good. Ideally, you'd want to have a credit utilization of 30% or less. The third factor is length of credit history. Said differently, the longer you have credit available to you, the better off your score is. So let's just say that you have a credit card that you've used for the past 10 years. Maybe you don't use it very much, but you have used it. That would actually be beneficial for your score, as opposed to closing that credit card down because you don't use it much after, say, 2 years, because that would be a much shorter period of time in which you had that credit available to you. The fourth factor is credit mix. So having different types of credit available to you, like credit cards and loans, is actually beneficial for your credit score as long as you're adhering to the other factors. The fifth factor is new credit inquiries. So if you want to get credit of some sort, oftentimes your lender will look at your credit score, and when they do that, that will create what's called an inquiry. Now, if you have too many inquiries, that can actually hurt your credit score. So now you have a credit score, but you might be asking, why does that credit score matter? Well, your credit score helps you get things like loans. So if you want to buy a car, sometimes you'll need a car loan. If you want to buy a house, you might need a mortgage, and so on and so forth. Another reason is for jobs. So sometimes your employer will look at your credit score to help them determine how responsible you are. Another reason is qualifying for an apartment. So oftentimes your landlord will look at your credit score to help them determine if you're going to pay them the rent and if you're going to pay them the rent on time. Another reason is to qualify for lower interest rates. So oftentimes when you have a better credit score, you'll get a better interest rate than if you did not, which will help save you money in your financial future. So how do you keep a good credit score? There's basically a handful of things that you want to do that we more or less have already talked about, but to reiterate what those things are, make sure that you pay people and you pay them on time. Make sure that you keep your credit utilization low, so 30% or less. Try to keep your old lines of credit open as long as possible, even if you don't use them that much. and don't open up too many accounts too fast, as that will increase the number of inquiries you have on your account. So there it is. Now you know what a credit score is, how to get one, and how to keep it high. If you found this video helpful, please make sure to like and subscribe. And if there's any other information you want me to cover, please drop it in the comments. Until then, we'll see you on the next one.